Welcome to Real Life Investing. This is Al getting in contact with you guys today. Going to be talking to you about three nice AI semiconductor stocks that are really looking good as the market is crashing with these semiconductor stocks. Remember, whatever we see on the channel is not financial advice. However, if you like what you see today, we just ask you to like and subscribe to the channel. We are growing and we ask you to grow with us. Now, the stocks we're going to be looking at today are going to be under $20. So that means that they are somewhat, I don't want to say too risky, but at the same time, everything is risky, right? But when we look at the markets overall, what we're looking for is high risk, high reward right here with these particular stocks. But from what I can see, these stocks have a good consistency. So even though there is risk involved, just like there is with any investment, these three guys I do like, and I do see them consistently moving forward. So let's just go ahead and start and look at the first one, which is going to be Himax. So Himax, this is going to be a semiconductor stock, drive for better vision, all your imaging needs all in one place. So just a little bit of heads up on this guy. Just the need to learn more, powered by teamwork, etc. At Himax, we believe that great ideas come from good people working together toward a common goal. So let's just go ahead and look at this in a little bit of detail. Noticing right now that Himax is about 1588. So this is really good from where it was. Let's kind of give you an idea. For the week, Himax is down about 6%. The month, it is down as well. And let's see, 3 months, it is way up, guys. So just to give you guys a heads up on this, over the last 3 months, this thing has almost more than double. So just a heads up on that. Make absolutely sure you understand that although certain stocks have gone down, that they're not way down from where they were. So even though you're going to see a drop, you're going to see a little pick me up as well. So Himax is going to be just fine. Let's start reading about this a little bit. I want to give you the reasons why Himax is going to be looking so good in the future. Says what they do, they make displays, driver chips, and imaging semiconductors used in TVs and monitors, automotive displays, AR, VR headsets, AI vision systems, edge AI applications. The company is deeply tied to AI-enabled displays and smart automotive systems. So right now we know that the trailing PA is roughly 35 to 100, depending on the timing and the earnings normalizations. So revenue remains substantial at over 800 million annually. So we got a lot of great revenue coming into the company. So the bullish case for buying the company itself is going to be AI, AR, and VR exposure. So Himax is positioning itself for AI vision processing, AR smart glasses, automotive cockpit displays, and edge AI chips. So if AR glasses become mainstream over the next 3 to 5 years, Himax could be a extremely important supplier. So right here we got the automotive growth as well. Automotive displays are becoming larger and more sophisticated. So Himax is going to be providing digital dashboards, HUDs, infotainment systems, AI assisted driving displays. So each big vehicle now uses dramatically more display silicon than older cars, which is very good for Himax. So semiconductor cycle recovery. The broader chip industry expected to grow due to the AI infrastructure and advanced economics demand. So Himax is highly cyclical, so that does mean it has some challenges as far as earnings can be rebound sharply, margins can expand quickly, and the stock can move before earnings fully recover. Now, potential as far as dividend. This is what I really like about Himax. Says that unlike many speculative chip names, Himax has historically paid dividends, and it still does. So that gives the investors income potential, downside support, and evidence of actual cash generation. So, for what I can see right now, Himax is a very, very good stock to put your chips in, as far as like at least put it on the watch list. So moving on from Himax, let's go to the second stock that we have in mind. And in this particular case, it's going to be Indy. Now, I like this little stock right here. It is nice little chip stock. And so let's talk about what they do. So with Indy, you got to see it's focusing on automotive semiconductors, autonomous driving, radar, ADAS systems, uh, LiDAR, vehicle UX, electrification chips. So it's essentially an automotive AI semiconductor company. So PE ratio and earnings, it's not profitable as of yet, but one of the things we can see is it does have a revenue of 219 million annually. So despite the recent growth, is built a sizable automotive design pipeline. Growth has not been as great as like, but that's okay because it has several bullish cases as well. We want to go with that. So the bullish case for buying is going to be the massive automotive semiconductor trend. So the modern vehicles are becoming computers on wheels, literally. So semiconductor content per vehicle is rising rapidly due to self-driving features, smart sensors, advanced safety systems, EV electrification. So Indy is going to be directly exposed to this trend. Now let's see if there's anything else we want to talk about here. So we also have long-term automotive contracts. Automotive design wins and are extremely valuable because of the fact that revenue visibility improves and recurring production volumes build over time. So we're talking about extremely potential, great potential as far as future cash flow. Also, there's a large backlog potential concerning this particular stock as well and this particular company. Retail investors and analysts continue focusing on Indy's multi-billion-dollar strategic backlog and the OEM relationships. In other words, these guys are going to be working for a long time as far as they have plenty of backlog and plenty of demand. So as far as them actually having the work to put out, it's going to be there for a long time. Also, this company is going to be working at it for a long time. So keep that in mind. So Indy's been aggressively acquiring acquisition, different companies, I would say, complementary automotive semiconductor technologies. The goal is to, one, build a full automotive silicon ecosystem, two, become a one-stop supplier, and three, compete for larger OEM contracts. So if this integration succeeds, this could create a much stronger company long term. So let's go ahead and take a look at Indy right now. Noticing that Indy is really at a very good price as far as if you want to get a lot of it. Now, let's see, down today just a little bit. It's been down for the past week for, what's this, about 9%. For the month, it has been down as well, 27%. But let's still go to the last 3 months. For the last 3 months, it is up over 40%. So I want you guys to keep this in mind as far as when we're looking at long term. These guys are doing rather well. So we want to stay focused on the great potential that these stocks have. Now, see if there's one more stock for us. And let's go ahead and start looking at that very quickly. And in this particular case, that one stock is going to be Quick, also known as QuickLogic. So looking at the ticker symbol is going to be QUIK. So right here, QuickLogic. And so secure, reliable, trusted. So built to evolve. Very nice information that we're going to be looking at here. Form next generation performance. This is on Intel. So if they're tied in with Intel, this is going to be excellent for us as well. So let's just go ahead and start reading a little bit about this guy. We're not going to go into it too much, but let's go ahead and look into it somewhat. So right now they develop FPGA chips, and when we're talking about that, this is referring to the field programmable gate array chips. That means that you can take these chips and you can literally reuse them. So embedded FPGA IP, ultra low power AI systems, edge computing semiconductors. So their niche is going to be small, customizable AI hardware. So the Ford PAE is going to be extremely high because of the profitability still emerging. It is a little bit speculative, but at the same time, with the people that they're working with, Intel, et cetera, this should be a good stock. Now, bullish case is going to have a tiny market cap, but this is going to be huge upside potential. So it's a small cap semiconductor company, but if management executes well, revenue growth alone could dramatically re-rate the stock. Given modest AI adoption could move the company materially forward. So got AI at the edge. QuickLogic specializes in exactly the category that matters because edge AI avoids cloud costs, lowers latency, and improves privacy. So we're looking at some great things that are occurring here. So what we want to do is we want to see that the float is relatively small, but momentum can become explosive, and positive contracts or AI announcements could move shares sharply. Let's take a look at this because, in other words, this thing could explode at any moment as far as in a positive way. Looking forward to this one. This is down today as well. So let's go ahead and take a look at the last week. Yes, it is also down. What this is about 15%. For the month, it is down about 18%. And let's see, over the 3-month period, though, you notice that the price of this QuickLogic has almost doubled. So, guys, what I'm pointing out to you is that even though we have these stocks and they are crashing for the moment, if you're willing to hold these for several months to a year, I'm looking at some really positive developments that are occurring. So you're looking to maybe, not financial advice, double, triple your money if you just hold them over time. A lot of good things are occurring in the semiconductor market, and we know that that market has been flourishing for a while. But at the same time, we're not looking to see any demand go down. So as demand for AI is continuing to go up, and either way you look at it, it will. These semiconductor stocks are going to go up as well. So just make sure you're right on the right side of the AI. Make sure you're getting as much money out of it as you can. And I think that things should go rather well. Just don't forget that AI is here to stay, and we better take advantage of it. This is Al Real Life Investing. Look at these three, and I think they should take you far. Have a good one. Bye.
Please share, like, comment, and subscribe to Real Life Investing. And thank you for watching.